All right, good day everyone. So today I'll be talking about fair value gaps and how to spot a valid fair value gap. Now, let me go over to go chatting. Now, most times we target a fair value gap for market to retrace back to and bounce reversely. Now, sometimes it doesn't happen that way, right? The question is why? Why will market disrespect the fair value gap? Why would market disrespect a fair value gap? Now, there are several reasons, but the major reason is because that fair value gap is not a valid one. And I will show you why it is not a valid one. Now, looking at this, let's say I have my market creating higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows. Now, you see that this is an uptrend, right? Good. This is an uptrend. And within this trend, there are fair value gaps, right? Within this trend, there are fair value gaps that market will always come back to before pushing up. But why would market come back to a specific fair value gap before pushing up? Why? So this is it. Now, let's say we have a fair value gap at this point. Okay. Let's say we have a fair value gap at this point here. Now, why would markets come back to this specific fair value gap and retrace back up? Why? Now, it's not like there are not fair value gaps here. There are fair value gaps here. But why did markets respected this particular one at that time? Now, it is because market has previously closed within this range. Now, what do I mean? When you spot a fair value gap, always try to check if market had previously closed within that range. Now, if you check from this point here down, let me change it to green. Let me make it more thicker. Now you see that markets previously closed here, creating an order block, right? So there must be a point where markets had previously closed, creating an order block, right? So let me call this. So you see, market had previously closed here, creating an order block. So market came back down and broke structure. Are you seeing it? Market broke structure, right? From that place market previously closed, it broke the structure. Now, if there was a fair value gap here, try to check if it meets with another block, and this other block should be where market had previously closed. If these match, if after spotting a fair value gap and you check and you see an order block, and this order block was a resistance, in this case this order block was a resistance that caused a retracement, meaning market had previously closed at that point, creating another block. If it matches or falls in line with that fair value gap, then it is a very valid fair value gap. Market has high potentials of getting to that point and bouncing back. It is like resistance turn support, right? But in this case, it turns support regarding or with respect to the fair value gap, right? Not with respect to any other block or whatever. It turns to a support with respect to the fair value gap, right? Now, what are the key things I mentioned? What are the key things I mentioned? Now, I mentioned, let me clone this. I mentioned order block. These are the things you need to look out for. I mentioned um, fair value gap. I mentioned fair value gap. I mentioned break of structure. Now you see these three things. These are the criteria that you need to have or that you need to see on your chart for this market to be valid. These are the criteria you need to see on your chart for this type of trading to be valid, right? So first of all, you have to spot where market had previously closed, and that point must cause an order block, a valid order block, meaning a reversal pattern, maybe an engulfing candle or evening star or hammer pattern. It must be a reversal pattern, right? Now it will create the order block. That's one. That order block must be in line with a fair value gap. That order block must be in line with a fair value gap. And market must have broken the structure from where that order block was created. That is the BUS. These three things: order block, fair value gap, and break of structure. It must be at least around 50% or above the fair value gap, right? For this type of trading to be valid, for you to actually trade a valid fair value gap. Now let's look at the chart. Now go over to the 5 minutes time frame. looking at this, I want us to spot a fair value gap. Okay, let's look at this particular one. Okay, let's look at this particular one. Take from let me draw this line. From here down. I want to see something good. Now, looking at this, you see that market created a fair value gap here. Can you see it? Market created a fair value gap here. So I had to trace it back to check if market had previously closed within that fair value gap. And yes, market had actually closed within that fair value gap. Did it create a reversal pattern? Yes, it did. So market had previously closed within that fair value gap, and it actually broke the structure from which that um, other block was created. It broke this structure here. It broke this structure here to the upside, right? So this fair value gap is very valid, very valid. Market will likely come back to this fair value gap and retrace. So if I were you, I will place my POI here, somewhere around here. Probably my stop loss will be below here and my take profit will be around here. This is what I mean. This is how I would trade this if I was to trade. This is how I would do it. Here is my long good. So taking my long two, I'm going to come down here, somewhere around here. Okay, I'm going to take it somewhere around this point, and my stop loss will be below this point, this liquidity here. Below this particular point, my stop loss will be below, and probably I'm going to do 1:2, which is, or more than that, which is somewhere around here. Or I can just take it to the next liquidity here. Right? I can just take it to this liquidity here. And in no time, I should be around my TP. Can you see? If I should place a buy limit here, somewhere around here, let's say I come down here and say, okay, since this is the beginning of the fair value gap, there's a candle that caused the fair value gap, let me create a buy stop here, right? Let me create a buy stop here. Once market gets to this point, once market gets here, it will execute your trade for you. And as you can see, if I had taken this trade, I would be in profit by now. All because I was able to spot a valid fair value gap, not just any fair value gap. Now, you can see the fair value gap here. Look at this fair value gap here. Do you know why this fair value gap is not valid? Because market did not significantly close within this range. This candle's body should be at least somewhere here for this fair value gap to be valid, right? For this fair value gap to be really valid, but it did not. That's why market disrespected it, right? Market disrespected that fair value gap. So this is like this particular fair value gap strategy carries a 60% win rate, right? A 60% win rate. First of all, before using this strategy, before trading fair value gaps, you should know the direction of the market. Understand the direction of the market. If you don't understand the direction of the market, you might miss it. Understand the direction of the market, then let your fair value gap be an extra confluence that agrees with the direction of the market, right? So I think that is all. One thing about trading you should understand is when you learn a strategy or when you learn something new, you have to practicalize it consistently. You have to try it out consistently so that you become familiar with that strategy. You can identify when and how that strategy will play out. So your trading will be easier for you, right? Thank you very much.